Hello everyone and welcome to Hit the Mark Trading's Daily US Dollar Index Review. My name is Martin Rimes. Today's date is Sunday, December 15, 2013. I want to remind you, check out hitthemarktrading.com. While you're there, take a look at the boot camp. This is going to be your easiest way to short circuit, to do a shortcut for learning trend and momentum techniques. Okay. While you're there, look at the context page, sign up for weekly blog updates, and be sure to sign up for Rooster Call. Okay? This is my early morning email I send out to clients, very brief. You know, we do our homework the night before. That means Rooster Call basically is going to be a look at the news and look at the charts, and if something's ready to trigger, well, I'm going to talk about it. Okay, I send this out free to clients. I like to send it out free to you. Remember, everything I mention in this recording is for your educational purposes only. Please do not construe anything I mention as an offer to buy or sell any type of options on currencies or futures on currencies. Okay, very good. Let's go to the charts. Now, I just want to remind you, monthly US dollar index, okay? Now, here we are since 2008, and we see that this area around 79,500 has really been the line in the sand. Oh, sure, a little bit lower sometimes. But more often than not, we touch this area and pop back up, okay? On the upside, we've got 85. So it should be no surprise that if we come to the bottom, we're going to go back to the top, or just grind. The event is if we break below. The event is if we break above. Now, we've got this diagonal trend line on the monthly. I've moved it over, okay, and I'm still got a nice touch here. Moved it over because we're just not doing anything. So if we break this line, it's significant, big time. Having said that, once we touch 85, history shows we're likely to just follow. The day we break 85 higher, that's a big deal. Automatically we know we're going to go to 90, okay? Now, let's just check out the weekly chart. Weekly chart says, well, I am in an uptrend, okay? I am in an uptrend. But I'm also sideways. Okay, I'm also sideways. So we're looking at price to come back down for a retest of 79,500, touch this line, and then pop back higher. Now this is a weekly chart. We have an event coming up on the 18th that's going to really drive US dollar one way or the other, and we don't know which way. And that event is the FOMC meeting. Okay. So the world is consumed about will the U.S. taper or not taper. And that will move the U.S. dollar. Okay. So our momentum indicator on daily chart has us with a downward bias. We're looking at this saying, well, we're going up to test our moving average. Usually once that happens, we test and drop. And I do measure the angle on the 34 exponential moving average over a certain amount of price bars. And this tells me we're in an extremely strong downtrend, okay? So it would not surprise me to see this pop down. But then again, going into the FOMC meeting, that their statement is going to absolutely cause a knee-jerk reaction. So you just need to be prepared for that. I wouldn't be surprised if we get subdued trading going into that. I don't think this is going to be a good one to really be trading in front of that report. Okay. Now, the range is very small on the intraday. Okay, it really is. So I made a video on the Russell 2000. You might want to check that out. Meanwhile, let's look at the intraday. And this is our business over here on Friday the 13th. And you can see we're in a nice uptrend. We came down, we popped, we can't hold it. Now here we are trying to break down again. Okay, so looking at Monday's trading, I think we're just in a back and forth seesaw type environment. I really do. Okay, this is a trend line. If we pop above it, that's bullish. Otherwise, these are your floor pivots. Okay, so price will probably stay around the main floor pivot, and if we move higher, we're going to run up to here, and if we move lower, we're going to go down to this area initially. With absolutely, we could go lower. Okay, just know that these are kind of like way stations, the pivots in day trading. Okay, now I'm going to draw another line. Okay. If we pop back up here above this blue line, then I'm going to suggest we are going to make a run all the way up here. Okay. Might be a little bit of excitement. Okay. First, of course, that's what we call R2. The minimum move is going to be here. So breaking the blue line, I know we're going to go there. Okay. All right. Again, let's just look at how much we're talking on range here. You know, all this may look dramatic. It's only 150 bucks, and you had to wait for that, you know. So just be aware. This is going to be a very, very skittish market going into FOMC, and then the knee jerk. All right, that's it. I will talk to you on Monday evening. I hope your holidays, shopping and seasons, all the eating season has begun, and that you enjoy.